The thing though I am seeing is that if you look at DBC, and if DBC is the commodity index, and I mean, you can look at a daily, you can look at a weekly, but that's actually, if you draw a downtrend line from its top back in June of last year, it has broken that. And I'm just saying that that's a change that that it's different. And you're always looking for change. If you look at what it's done in the last, let's say the last 2 weeks or so, it's 4 days. Let's see, 5 to, that's about 10 days up and 2 days down. You got to increase in volume a few of those days, but it's something to note. If you look at, I mean, parts of the half of that DBC though is oil, so we'll have to take a look at that. But if you look at corn has made a move up fairly dramatically. Soybeans, SOYB, has hit new highs. Wheat, WEAT, is well, it really hasn't turned yet. But if you put in USO, USO has broken that long-term downtrend. So these are things to note that could have a influence on inflation. I think it's always good keep an eye on what's TBT doing. It looked like it was going to break out, and then it pulled back in, and is kind of right back above that 200-day moving average line. These are all things that I watch. I look at on a daily basis. The interesting thing that I just read is that the dividend yield on the S&P 500 is 1.5%, which and a U.S. A note, a U.S. Treasury note, you can get 5.4% on your money. The 2-year is 4.87%. So, and from what I've read, that's the highest spread in history between those two. And it's just things to keep an eye on, things to note, because remember, the markets are just voting for your dollars. Where are your dollars going to be treated the best? And if that yield just keeps on going up on notes, and that a lot of people are going to say, hey, why fool with the market? Why don't I shift my money over to T-bills?